In the last month, we have seen a little bit of a sell-off in the market, and it's only natural because there's been turbulence, with these increased, rate hike, fear taking over. But luckily, this, past week, the Feds decided not to raise the rate. And of course, we finished off the week in the red, which was fantastic. Reason being, when you own a lot of tech stocks like I do myself, you're basically supposed to take nice sell offs when there's a little bit of market turmoil, increased rates like mortgage rates, for example, inflation on goods, all this good stuff, decrease in consumer spending. It's all going to start to take a toll. Now, in the last week, given how much the tech market has sold off, we are seeing market futures green as of right now. Everything looks pretty good as of right now. Seems like it's just simple terms a pullback from last week. And right now it seems kind of strong, but I mean, I feel like it's just a little bit of short term optimism given that last week was kind of brutal. We saw the NASDAQ sell off almost 200 points in the span of one day. Rates went up, and then Jay Powell was speaking, and the Feds were like, hey, we're not going to increase rates. So that's great for the most part. But what is nice is that since the US Federal Reserve officials warned on Friday, which is great that they decided to announce all this going into the weekend, so it gave the market kind of like a breather, in terms of like, hey, we're announcing what we have to announce, and it's not like the next day the market's going to open and it might be down even more. But the US Federal Reserve officials warned on Friday of further rate hikes even after voting to hold the benchmark federal funds rate steady at a meeting this week, with three policymakers saying they remain uncertain the inflation battle is finished. And keyword here, patience. Of course, I feel like this is the soft landing that they're simply looking for. You mean when you're really kind of looking at it in simple terms and more of like the bigger picture, if you're trying to get rates in between the range of 5.25 to 5.5%, I mean, I don't really see too much of a difference. To tackle inflation, it's going to take a lot more than just uh, you know, basically pausing rates for a quarter or increasing rates, by 25 basis points or here 0.25%. And I feel like they can only pause it for so long because by next year, beginning of next year, I have a very good feeling that the Feds are going to be increasing rates from there because they'll only be able to hold out for so long until they see that, within however many months of pausing these rate hikes, that simply has not been too much in terms of, lowering inflation. And it's not really so much the soft landing we were all looking for the most part. But that brings me to myself being a little bit more defensive as of recently. Am I worried? Absolutely not. Never been worried, right? Because we invest long term. And what's more important is that looking at this long term factor of, when things like this happen and inflation goes up, people get worried and they sell. My opinion is not to sell. My opinion is to buy when people are fearful. And then, of course, you've heard the saying, as Warren Buffett says, sell when people are greedy. But in this case, since a lot of people are becoming fearful, I figured, in the last month, I feel like the last month is a pretty good indicator given how much the market has started to sell off a little bit, kind of like dipped. Um, the three tightest holdings in my portfolio that I think are pretty much the most defensive, and you can disagree or agree with me, are Berkshire Hathaway Class B shares, Merck, and then SPY. Now, of course, SPY is outperforming Merck by just a smidge, and Berkshire Hathaway is actually in the green. And, having a lot of friends who work in real estate, of course. One of my buddies, he actually works for Berkshire Hathaway. He's like, yeah, real estate is continuing to be sold. A lot of people continue to put their money into real estate. Usually, when the tech market sells off, it's not always this way. There's been cases where Berkshire Hathaway and the tech market have both sold off, so it's not always guaranteed. But if you look at it in the sense of, hey, you want to can share a real estate stock, real estate investment stock, a biopharmaceutical stock, and then the S&P 500, these are actually not too bad when you're comparing all these three to other tech stocks in the market that have continued to sell off in the last month. So I will be plugging in probably more investments, basically prioritizing more of my investments towards these three holdings, which right now, SPY, if I'm not mistaken, makes about 20+% of my portfolio, which is great. So prior to when I was building up to my $100,000 challenge, basically I had majority of it in like Apple, Nvidia, and a lower percentage into SPY. And then now that I transferred all that money into my other account, we're seeing that the market's starting to sell off a little bit. And I said, I've had a lot of money in techs. Let's go a little bit more defensive. And this is all about having fun. So these are the three stocks I'm probably going to be extremely defensive about. And right now it's almost pretty much end of September. We still have October, November, December. We're closing out Q3 right now. So I would say by December, I'd love to increase these positions substantially, because if we do start to see more of a sell-off in the market going into Q4, holiday season as well. I want to have these positions built, but I want to have enough cash as well in case the tech market starts to rebound. Because a lot of people are assuming that the S&P has a lot of upside, something like 10 or 15% upside by the end of Q4. I mean, that's just an opinion. These are analysts throwing out, basically their own opinions. I will believe it when I see it. Now, of course, we all know I'm an Apple guy, big Apple guy over here. Now, these are all tech stocks that I own for the most part. And as you can see, the top two I have not really seen, actually, just kidding. The top two I have not really seen taking too much of a sell-off is Amazon and Apple. I feel like right now they're still dominating in their area of the market. They pretty much, I won't say the M word that they have in the market, but pretty much they own a majority of their own market, whether it's e-commerce or consumer goods for the electronic what do you call it, electronic device industry, entertaining Gen Zs and grown adults on iPads and computers and phones. So Apple has actually, if I'm not mistaken, has taken less of a sell-off. Yeah, actually is taken less of a sell-off than SPY. So is it the most defensive tech stock that we have at the moment? I think so, because Apple has always been a little bit more of a hedge towards inflation. For some reason, Apple has always continued to outperform other stocks, even when times are not good, because people continue to buy these goods, whether they can or cannot afford them. And when times are still not good, even though big retailers might be decreasing with earnings and revenue, we still have Amazon coming in strong because people are still going to be purchasing goods online. Because one, it takes less effort to go to a store. Number two, your credit card information is already in the file. And number three, it's convenience. One click, done. Orders coming to your door tomorrow morning. I'm surprised that Tesla is still in the green, considering how much of a sell-off it's had in the last week. These microchip, issues just going on in the world. I do think that it's going to continue to get worse. And obviously, Nvidia has had a substantial run-up. All these stocks have had a fantastic run up. I'm still well in the green for most of these, given year to date. I said that's phenomenal. You want to zoom out from that 1 month and look at the year to date. They're all winners. I've made a substantial amount of money on this, but the point is, going into the end of Q3 into the end of Q4, want to look at what are they doing right now that maybe other stocks are not doing, or what are they not doing that other stocks are doing. So that's why I like to diversify my portfolio a little bit. It's good to take a step back every maybe 3 to 6 months, in my opinion, and to look at where these stocks sit in a sense. So I'm looking at all these stocks now. Okay, they got beat up last month, but they're still up year to date. Whereas if we go to these stocks, my defensive holdings, they're doing pretty good year to date, except for Merck, right? But right now, Merck is basically going to be pretty much flat. Berkshire Hathaway, SPY is pretty much green. So, do I want to put more money into here, where they're starting to come back just a little bit, but it's a nice modest gain? Or do I want to put money into here, where they're starting to sell off from their yearly all-time highs, whereas they've already been up well over 39 to 190%, right? So absolutely ridiculous gains. So we'll honestly just have to see. I'm going to take my foot off the gas just a little bit when it comes to the techs for right now, because I feel like we're going to have a lot of volatility, and I think good volatility going to Q4. But for the most part, I think that Berkshire Hathaway, Merck, SPY are going to be three top contenders for my little inflation hedge for the most part. And I do think that as of right now, it's good to keep all of my options open, because looking at all of these, contenders of, which one is going to be performing the best, at the end of the year, you're probably wondering why to include Shopify on there. It's kind of like a smaller investment that I've been experimenting with. So it's not really guaranteed at the moment. But in reality, I think a lot of these top contenders are going to be the most defensive going into next year because we do also have election year coming up, so it's going to be very volatile. A lot of people are going to be, campaigning. A lot of ads are going to be spent. So I think the tech industry will be doing. I think the tech industry will pull back even harder by next year, because that's when we see a lot of tech companies usually perform well. We saw it, especially during the 2020 election. A lot of ads are being spent, a lot of people are spending money, but there was also, keep in mind, a lot of stimulus money being pumped into the economy. I could be wrong here, of course. So it's good to see that these market futures are up. These are just for right now. It could open up red, it could open up green, but for the most part, we will see. I hope you took some good insight into my little plan going forward for the next 3 months. We will keep updates, frequent, and hopefully, we could just continue to move our way up in this chain of working our way back up to $100,000. Because I would love to do that as quickly as possible in the most, ethical manner. So, other than that, hope you guys enjoyed the video. Don't forget to like and subscribe, and I will talk to you guys next time. Take care.